Bell, join us now, legendary emerging markets investor Mark Mobius. He's the founding partner of Mobius Capital Partners. Hey, Mark, I'm looking at things change quickly, and I'm looking at your notes. And in our notes here, we say Mobius recently decided the lows aren't in. We haven't hit the absolute bottom yet, which was a change in your perspective. But I look at the date on that, and that was on April 14th. So we've got another week under our belt now, and we're probably 30% or so off the lows. You still think we go back to new lows? Not all markets, but most markets have not seen a bottom based on fundamentals continuing to decline globally because of the virus?
Well, I think what you've seen is an incredible recovery. And, you know, if you define a bull market as a 20% rise, we're in a new bull market. But I don't think so, because I think at the end of the day, the earnings hit on so many companies around the world, not only in emerging countries, but in developing countries, has not really sunk in. And once those earnings hits come out, then people will have some second thoughts. Nevertheless, you know, we've been buying, as I mentioned a few weeks ago. We figured it was a good time to be starting to buy, but reserve some cash outside so that when the market corrects again, we can come in again. So I expect another correction because this recovery has been almost too fast. So we got to keep some powder dry. Let's put it that way.
We always talk about depth of something and duration. If it was a one-quarter hit, I would imagine that multiples could stay, you know, it could rise, and you could sort of look beyond that quarter, almost like, you know, suddenly we're adding $5 trillion on. We used to think $1 trillion deficit in a year was bad. We had $5 trillion on to do all these things, and it's like, well, it's a one-shot deal. We'll deal with it later. So I think you must be at least predicting it's not a one-quarter hit to earnings. It's either 2 quarters, 3 quarters, or it takes a long time to even get a little bit back so that it goes out a year. Because if it was just a quarter, Mark, I would say that you shouldn't be concerned about what the E is in the equation for where stock prices are.
Exactly. I agree completely. That's why we are really probably underestimating the impact. Don't forget, a lot of companies are going to go under. And I've been telling my analysts is look at the balance sheets very, very carefully. Look at the Z-score. Make sure we're in companies that have strong balance sheets, because it's going to be tough recovering from this. It's not going to be easy.
So how many quarters then are you? And we only get parts of it back in serial fashion, I guess. You get, you know, earnings go down 50%, whatever. Then we get 30% back. Then we get, you know, 35% back. Anyway, we only got about 20 seconds left, Mark. I think we catch your drift, but you figure this is going to be a year at least before things get anywhere close to back.
I think so. I think it's going to be a year, because a lot of these countries are looking at extending the lockdowns. So it depends on where you are, of course. It varies from one country to another. But yeah, I think at least a year.